Well, good morning, people. Welcome to the live stream. I hope you guys are having a great morning, or a good evening, or a good afternoon. If you can hear me, please, as usual, give me that thumbs up so I know that I'm not talking to a wall or just a computer screen. But it's great to have all of you guys here. All you beautiful people, welcome in. Those tuning in from far and near. I know there's a couple of people tuning in from Asia as well. Welcome to all of you guys. Today we're going to take quite a U-turn from our usual approach. I'm still going to go through the US macro conditions, and then once I'm done with that, I'm going to basically go through the technicals, and then as usual, we will get into Q&As just like always. So if you can, just tune in, try to follow along. If you're a newer trader, I know that there's going to be a lot of you that are just getting introduced to the stock market. And, if that is the case, I'll try to break it down as much as possible so that you can understand the clearest and the best. Great, so let's dive in. So as usual, let's do our news breakdown. As you know, majority of the time, I use the Wall Street Journal and Bloomberg as my choice. I like these two news outlets because they cover majority of the news in a slightly non-biased way. However, there are arguments to that. The news continues to cover the narrative in a bearish stance, showing that there is a labor market collapse, and we're seeing all kinds of breakdowns within the market. We have mortgages that are starting to show cracks, and then we also have corporate bonds, which are how U.S. businesses fund their debt, show cracks as well. And I've gone through all of this last week in our live stream. If you haven't watched those, I would recommend to do that. Welcome. Thank you guys for coming through. Cool. All right. Nice to see you guys here. Welcome in. All right. So we have some big news that has just broke, I believe, unemployment news. But however, I can say that with almost all certainty that this news has already been priced in. You can see that the market's not really reacting extremely to it. Um, and there's a couple of ways to look at this. And I was really pondering upon this because I originally thought that this was just one big short squeeze, but it's become more and more apparent to me just the way the market has been moving. Moving up on bad news is usually the sign of a end of a bear market. Just like how good news is usually the sign of the end of a bull market, bad news is the sign of an end of a bear market. And let me explain that to you in a way that would completely, I know it completely doesn't make sense, but it's counterintuitive. And the reason is simple. It's because of something called the efficient markets hypothesis. Okay, and if you haven't read up about this before, I would highly recommend that you do. It is a theory that was come up by Eugene Fama, and his counterpart Schiller, Robert Schiller, who is the proponent of the Cape-Shiller Index. And both of these are behavioral finance people who really do good work in the behavioral finance field. The thing about it is that you have to understand that, markets price in bad news about 6 months to 1 year before the bad news actually happens. And that was this drop right here, okay? This is the S&P 500 for new traders. This is the top 500 companies that are traded on the US stock market, okay? And the market recently crashed because of the coronavirus, and we have seen some interesting stuff that has happened since then. The thing is that bad news is often priced in about a year in advance. And so at this point, we're seeing majority of the bad news priced in. Now, that's the reason why we keep rallying on bad news. It's because majority of the things that we have seen as bad news has already been priced in. But this doesn't mean that we should be going all in on calls, or we should be taking huge bullish positions. Because the problem here is that you're not a fortune teller, and neither am I. And none of us can predict where the market's going to go. But what you can do is take an educated guess to position yourself in the most informative way using probability and statistics. And this is done not by calling bottoms or tops, or knowing where to buy or knowing where to sell, but knowing where the approximate range of things are going to be, so that when the market crashes or goes up, you can be in a position to capitalize on both. So if you have been following along with the live stream, you would know that we've seen a big drop, and we're now looking at things on a 4-hourly, so things are a little more zoomed out here. You can see more price action. One thing that I want to point out first before we continue is this. I want to point out that we have seen increasing amounts of volume every day on SPY ever since the market drop happened. You see how big these candles are? They're huge, right? That means there was a lot of price action going down and a lot of price action going up. The volatility is what causes the fear. And that's why we use the VIX, which is the fear index that records volatility, right? However, if you look at what's been happening in the past 3-4 days, we have seen volume take a big hit. We don't see that much volume anymore, and hence it's safe to say that the fear is slowly draining out of the market. Now, in the majority of us who are in part of Option Swing, which is the trading group that I'm a part of, that we have almost 850 active traders trading on a monthly basis, and this is what our channel looks like. We have professional traders that call out trades. We have analysis by members. We have earnings plays that we do. We have a bot that tracks smart money flow, and then the education chat that I spearhead. The majority of us have been waiting for the next leg down, right? And I've said that this was a dead cat bounce, and we're going to see some kind of sideways action before we head back down. Now, it doesn't mean that this is not possible anymore. All I'm saying is that at this moment, we're going to have to be a bit more careful since we see volatility starting to slow down. When volatility slows down, that gives rise to the bull's pen. And so this is something that we have to be very, very careful with right now, okay? Bulls push the price up, bears push the price down. I definitely do still see SPY through 2000 or 2200 retested in the near future with all of the macroeconomic conditions not met. But we have to be careful with this now. This lack of volatility is what worries me. And it doesn't mean that we're for sure going back up that easily, but it just means that we might be trading sideways, which is equally as bad for players who are trading options, right? Because if the stock, if what you're trading keeps moving between this range and anything that you are calling for is above this or below this range, well, then your best friend theta is just gonna gilly whack you, right? Yeah, use gilly whack. So you want to make sure that you're positioning yourself here to capitalize on the downside next, and then get out and start getting some kind of long positions. Start accumulating long positions if we can get a break here. And we're going to see how that plays out. So let's see if you guys are still here. Cool. Nice. All right. Cool. So yeah, we gotta be careful of this right now, and make sure that we are counter-reacting everything with a rational response. We can see majority of the world is kind of plunging into despair right now, and I did mention I see that our pinnacle key dates based on probability and statistics are the third and fourth week of April to hit the peak outbreak of the virus. Now, the thing about it is that the economy is not the same thing as the stock market, and you have to remember that. Because of how the stock market prices things in 6 months in advance, the same way what causes the bull market to inch up is what causes the end of a bear market. And when we see people speculating on asset valuations going upward, the same thing happens with asset valuations going downward. When people start to think that this is cheap and they start buying it and it keeps going up, and then they say, no, it's cheaper, let's keep going. At some point, there comes a moment when people realize, you know what, this is not worth it anymore. And then obviously, given that we had this drop first and then we came up to breathe the second time, and then we dropped all the way down, right? So the same thing could happen here, and we have to be really careful about that. So I do still see us making this wave up and then coming back down to test the bottom again. But I'm going to be starting to take a different approach where if we can break below this level, I'm going to start accumulating long positions here. Now, the golden question becomes, what do you buy, right? What do you buy when this position is breached and you're starting to take long positions for your portfolio? The answer is very simple. You have to buy companies that have a proven track record of great cash flows, right? Companies that have superior earnings, EPS, earnings per share, and also companies with an economic moat. Now, economic moat refers, in other words, to a competitive advantage. So you want to look for companies with these three major points. In terms of valuations, nothing makes sense right now, right? Everything's either undervalued or grossly undervalued at this point. So the problem with this is deciding what you're going to buy, because not everything's going to go back up the way that you expect it to. In fact, majority of the companies that are about to be going up back from where we were are not going to be in the same caliber. For example, I don't see certain companies going back up to the same level as what we did before the crisis happened, right? And so we have to be careful of that. Buy companies that are only good valuations. Okay. So a couple of ones that you want to look at, and I have been looking at Microsoft. I really like this company. Microsoft is one of the few businesses that are almost recession proof. No matter what time or how bad the economy is, Microsoft is going to be a leader in its segment. And you can obviously buy shares in it, but you could also do the other way, which is buying options, right? Obviously, I'm not going to get into the nitty gritty of options, but Microsoft is one of the stocks that I'm looking at to buy a long-term position when this level is breached somewhere here. Okay, and we'll see continuations of volatility. Hopefully, we see continuations of big volatility, but I see volatility slowing down. Now, what is a good option, right? So I've told you guys that I have done a valuation of Microsoft before, and I see it going back to at least $200, which is its true intrinsic value. So which option do you pick? Now, the answer is it kind of goes based on your risk tolerance, right? Because these contracts all range between $1 premium, and you have to pick it based on your best risk appetite. So looking at some of the Greeks here, I really do like the Greeks for and the risk to reward ratio for the 180 call at almost $900. This contract is actually pretty nice. There's a pretty decent amount of open interest. Obviously, the price of the contract is not going to be the same as this was yesterday's value. And as the market goes down, this contract is going to be cheaper, right? So I'm looking at the 180 calls for January 15, 2021, which will give you the right to buy Microsoft shares at $180 on this date. And I'm looking, at this contract as a good candidate for my portfolio. Other companies that I really like are Amazon, which is also a really good one. Amazon continues to be a very, very strong, formidable opponent in this downturn even. Now, the only problem with Amazon is its options are super expensive. So you're going to have to risk more in order to make some. But I believe that the risk is worth the reward because this company has a really, really big economic moat, Amazon. So I was looking at some of these as well. And I really like the 2,100 calls for Amazon on January 15 as well. However, they are super expensive. They're almost $14,000 a pop. So you would have to go way out the money to afford this. And it's really based on your risk tolerance, but 2,500 would be nice as well. But I don't think that this would hit. So you have to wait for the market to come down for you to get these at a discounted price, because there's so much bullishness on Amazon right now. The next one that I like is Tesla. Now, Tesla has a very, very big risk factor. However, the risk premium for the stock makes it a very prime candidate for long-term calls. And I'm looking at Tesla for not next year, but I'm looking for almost November or October, which is somewhere around the elections. One thing else that I wanted to kind of point out to you guys was, based on the trajectory of SPY and the way that it moves, because, we know that we're not going to see a wave down like that or, a wave up like that. We're going to see, as I was explaining last time, the market never moves like that. It always has a breathing out, breathing in, breathing out, breathing in, that kind of thing. Based on that, we have to estimate that, we have elections coming up this year. And in November, or by November, President Trump is going to do everything that he can to pump this market back up. He wants to win, right? And he has the support of the Fed to do unlimited QE, which is printing of money. He has the support of the Fed to do a whole bunch of things. They're basically buying corporate bonds at this point too, right? And then they're buying, a crazy amount of treasuries with that QE, right? And now they've even signaled that they're about to consider buying stocks. Now, we've never seen this ever happen, but if it does, that signals a lot of strength from the Fed. So that all plays into taking the risk premium on certain stocks. And we've seen all-time highs with Tesla going crazy. And on the next dip, you could easily capture some premium on Tesla. If you own Tesla shares, you could even, play the wheel like Mike in our channel has, so graciously shared with us. You could play the wheel and keep collecting premium on these contracts. If you sell the call. And I honestly definitely see Tesla hitting something like 700 or 650 by the end of the day. Sorry, not the end of the day, but the end of the year. So we have to be optimistic about those things. And the last one that I was looking at was actually Tencent. And I really like Tencent as a company. If you look at its balance sheet, you look at its economic mode, great company, barely affected by the stock market. And I believe that you can trade options with this as well. But do your due diligence about Tencent, because I know that majority of people have an issue with Chinese stocks right now. I see the opportunity in Chinese stock markets right now, but not everybody does. My other favorite is IQ, which I keep talking about. I really like this stock. It's a long-term winner. It's a combination of Disney, Netflix, and a gaming company, you can say. And it does online streaming within China. So I think that's a really good choice there. If you're looking at Chinese stocks, look at Tencent, look at Ichiyi. Those are two great ones. Great. So I think we kind of covered majority of the breakdown. Let's look at some of the questions that you guys have for me today. Just getting very professional. Thank you very much. I appreciate it. Thank you. Minus 700K. Yeah, and it's unbelievable that kind of news didn't move it, because as I told you, the bear market has already priced it in. Let's see. Okay, so I'm gonna kind of leave this open for some questions right now. If you guys have some questions, I'll be definitely willing to answer them. Keep them coming. And like Apple. Yeah, Apple is a good candidate as well, but I have a major problem with Apple's valuation right now. And the reason why is because the company itself is going through some significant headwinds within China and its supply chain. And it just so happens that Apple has chosen two of the world's most hit places in the world for its production, which was one China and the second was India, right? And both of these, supply chains have been hit by the coronavirus, right? So I see significant problems with Apple's supply chain that will cause further headwinds to the business. However, I must stress that Apple's main business is kind of diversifying away. So we would have to see how that plays out. Apple is a good stock to own long term, but not a short term play. So, okay, 14K for one contract. Yeah, I know. So I would look at Boeing as well. I actually really like Boeing as a company. I was looking at Boeing last week and I ended up not pulling the trigger. But I definitely like Boeing as a company too. The issue with Boeing is that the fact that they need to be bailed out might cause some stir with investors. But we'll see. I think that Boeing is a good one as well. My puts better play. Yeah, I hope my puts pay too. Does oil rebounding mean we are close to the bottom? No, actually, so contrary to popular belief, oil does not have a big correlation to market stock price or market asset prices. Although oil does mean that we will see cheaper production or cheaper operational costs for businesses. So that might be positive. It's only positive when oil is cheap, but you have to look at it from all angles. And oil doesn't have a huge correlation to the market. In fact, oil is completely uncorrelated to stocks, but it is considered a risk asset and a commodity. So people often put oil into their portfolio. Where do you see SPY closing today? Well, I really hope that we close somewhere on the bottom here. my hope is somewhere around here, which is going to be around 230 or 240, let's say 245, hopefully. I really hope 245. That would be nice. I have puts on BA, FB, BABA expires. What do I do? Oh boy, that sounds a little scary. Well, I would hold them for now. But if the market rallies up, you've got to cut them next week. What do you say about Microsoft again regarding long calls? Microsoft was a good candidate for long calls. 2021 January calls. Okay, get it. What your thoughts on Boeing for long term? Excellent play for long term. I would get June calls for Boeing at, let's say, 150. Can't go wrong with those. How will this affect the upcoming earnings for Q2? Bearish plays. Well, at this point, the market's already pricing in the bad news. And so you have to realize that when they are pricing in the bad news, it's going to take a lot to move the market at that point. So we have to reevaluate right before earnings season comes out. Are there any ER at end of the day that will be good option to buy for Monday? Monday is usually red. This will be further talked about in our channel, which is for our paid members. We go through our ER plays throughout the day and then call them out at the end of the day. It's part of the perks that we give to our members. And so is Monday usually red? I don't know, man. Flip a coin. You might get a better answer than that. Those are 50-50, bro. What's your strike for Tesla in September, October? Well, I would go with the 600s to 700s. Those are fairly good, decent strikes, I think. How do you know when a stock is done selling off? This is a good question. So there are a couple of ways you look at them, right? There is a indicator that you can use, and then there's also the fact that the volume slows down. So when a market's at a bottom, you would usually see, instead of big swings like this, you would see smaller swings like that, because there are less players in the market and you can see exhaustion, basically. Exhaustion from bulls, exhaustion from bears. People are just tired. They're like, you know what? Let's just trade sideways. I don't want to deal with this. So then the algos take over and just push the prices like a kind of a up down thing. But it doesn't mean that we can't see another push down. It just, it's just getting a little tiresome for people who are playing options, because the longer we go sideways, the more theta drains your options and the more of problems you're in. So it's hard to call a bottom, but one of the major ways to tell if the market's done selling off is the volume starts to subside. That's my major indicator. Let's see. Tips for setting stop losses. This is a good one. Great question. So I know that many of you are having troubles with position sizing and position stop loss. Now, to that, my biggest advice to you is start with 20% of your position as a stop loss. And then if you see that you constantly get stopped out, I would adjust your stop losses to a higher percentage based on what your risk tolerance is. The issue with stop losses is this. Let's say you bought a call here. Okay, no, sorry, bad example. Let's say you bought a call here, okay, right here, and then the stock moved up. And you expected your target to be here, okay? Now the stock came back down and your stop loss was here, because you said, okay, you know what, I'm gonna put my stop loss here because I know that this is the low of the period that I'm looking for the swing, and my profit's up here, so I'm looking at let's say the distance for my stop loss is based on a 1R distance, right, which is the return. And then you got to have a 2R distance from your entry point. So let's say your profit taking zone is somewhere up here, right? So this is, let's say, 2 to 3 times the value of this, which makes it 3R, which is a great risk to return. But the stock U-turns, and then I'm giving you an example based on this chart, not the ticker, okay? But the problem is that market makers, they know where your stop loss is, because you put in a limit order. When you submit a limit order for a stop loss, the market maker knows exactly where your stop loss is. So they can come down and squash you out before going back up, which is very, very common. To avoid this, you have to either avoid setting stop losses altogether, which is not the point I'm trying to make, or you got to put your stop losses lower, right? Somewhere here. So play around with the idea a little bit, and try to set a stop loss based on your risk appetite. TLT calls for April. Yeah, I think these are still good. Bonds, I'm still bullish on. As you know, there are a lot of SPY puts expiring on 4/17. Should we expect? Yes, we should expect another squeeze on that day. In fact, we should expect a squeeze this whole month, in my opinion. Just because there's so many people who are bearish. You also stated watch SPY for the dip buy calls Microsoft Tesla. At what price are you looking at? So I'm looking at when SPY hits a certain level. I'm looking at when SPY hits 230, 220. I'm going to start to accumulate some long positions there. How do you feel about airline stocks right now? Absolutely won't touch airline stocks until we can find a resolve to the situation. Hit the like button. Yes, please. Thank you. Hit that like button, man. I really appreciate that. Also, if you like the stream, please leave a comment, with something that you want to see in the future. That would be really great. 243.84 is a fib line for me. Yeah, looks like that sounds about right. Support. Thank you. What do you think about HD calls for June? I think people get into the projects at home wanting to save. Possible, but I wouldn't be too bullish about that. Home Depot is still one of a big chain kind of brick and mortar store that requires people to walk in to buy things. And right now, I don't see people walking and doing a lot of those things. I would look at longer term, not for June. I would look like September, October, even closer to elections. What are your thoughts of locking down the long haul? I would not touch the stock right now just because we know that they have definitely messed with their balance sheet. So I wouldn't go long on it. But if you want to scalp it on volume, you could consider doing that. With the dollar climbing in value, oil pumping, and gold pumping, where do you see the investors putting their money? Are we due for a major shift in commodities? Well, this is a good question. Now, as I had said on my previous live stream, the thing with oil and gold is that they're still considered risk assets. And the thing about it is that even though oil and gold are considered like something where investors park their money in during a downturn, gold is still one of those things that can see a significant outflow when investors run to completely cash. We saw that happen at the bottom of the bear market. I shouldn't say the bottom of the bear market. I should say the bottom of this period right here. At this period where fear was at the all-time high, everybody ran for cash, nothing else. There was nothing else being bought except for USD. And that's because dollar is a safe haven and represents 60% of the currency in the world. So people are going to flock towards the dollar as a safe haven asset. To answer that question, investors might start to pour their money out of dollar and into emerging markets, in fact. Emerging markets seems to be the play now because it's a high risk, high reward play. Remember that investors are focused on delivering alpha to their portfolio, and they're always focused on getting the biggest risk to return that they can. So look at things that have a high risk to return and you might get your answer. How do you set stop losses in Robinhood? Can you show us on your display? Sure, let's see. Well, not on here. I don't think you can show it here. Let's see. Stop loss order. Stop loss. So you would do, usually it comes with two. It would be a stop price and then a limit price. And then you would have the number of shares, right? Same goes for the options. Same thing exactly. And you could put it to either for good for the day or good for cancel. So let's say Tencent's trading at 48. You want to put your stop loss at 47. Your stop price would be 47.05, for example. And then your limit price would be 47, which is your actual stop price. So put your limit price about 5 cents below your stop price, and that kind of usually makes sure that you get filled. But it doesn't work 100% of the time. You have to be careful about those, and then put in the price of the contract, and it's that simple. What are your recommendations for trading knowledge books? Oh, great question, man. Right now, I'm really heavily studying and reading about behavioral finance, which is a field that I really like, and I really like knowing how market participants are thinking, and that's really important because it's it's really at the forefront of what research is right now, and I really like behavioral finances as a way to understand the markets. How will RCL fare now? Buy or don't buy? I would not touch RCL. It is going through a lot of problems, and I don't see it even getting a bailout. So might be careful there. How can we scalp for profit? Well, scalping is scalping is a very interesting idea. Well, okay, for example, right here, right? Let's see if I can like maybe do something live even. Well, I would have, but not very. Okay, for example, let's just give you an example right here. This is S&P 500 live right now, 1 minute chart, okay? Now, we saw this rally up, and we see that there's significant resistance up here, okay? Oh, and I just saw SPY breakout. Look, you can take a position right here, right? But you get it on the pullback. You get it on the pullback. You wait and you take a position on the pullback. Oh man, I guess my demo account's messed up. But the idea is you take on a breakout like this where you see SPY breakout, and that would have filled. If that filled, we would have seen significant upside. But essentially, the idea is when you see volume come out like that, you can take a trade on a pullback. You wait for it to recede about 50% of the candle's width, and then you take a big size trade like that, and you ride it up to the next high, which is up here. That's in short how you would execute a scalp. Which broker do you use and why? I use Robinhood and TD Ameritrade. Robinhood for simplicity, long-term investments, and then TD Ameritrade for execution timings, which are superior, and charting and risk analysis. And my trading style is like an Asian Canadian. Okay, so well, thank you for tuning in today. I see if you guys have no more questions, happy trading. If you haven't liked and subscribed, please do so. And visit optionswings.com, a great platform if you are a beginner trader learning, kind of getting into this. I would highly recommend joining our community. We have great traders there. In the interest of keeping this as short as possible, I will end the stream right here. Thank you for tuning in, and I'll see you guys on Monday, bright and early.